She's the mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.
Thank you for tuning into my show. I'm Debbie Marcoux, and I am the Mortgage Mom. I'm licensed by the Department of Financial Protection and Innovation under the California Business Consumer Services and Housing Agency, NMLS ID 237926. Also licensed in Arizona 0941504, Florida LO 76508, Georgia 69178, Hawaii 237926, Idaho MLO 208023 7926, Illinois 031.0058339, Nevada 57237, North Carolina I210940, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
All right, so welcome to Mortgage Mom Radio. I'm Debbie Marcoux. I am the Mortgage Mom, and that disclaimer just keeps getting longer and longer. I had to update that today because I've added quite a few new states, but how exciting. We can help you guys in many more areas than we used to. So keep reaching out to us if you have questions. Love to help you. I can see that Armando's already jumped on and said exciting news. That it is. It was very exciting news. It was a good day. I actually have the Fed's statement, so I was going to read that to you. I did watch the entire press conference, kind of dumb it down for you guys. We did, as I said in my text message, we did get a quarter point lower in rate, which is fantastic. It was actually very enlightening to see somebody ask how the Federal Reserve rate cut was going to affect mortgages. And it was nice to see Jerome Powell get on there and actually talk about how they have absolutely no control over mortgage rates, that the Federal Reserve does not control those, which I've been telling you guys for quite some time, but that the rate cuts do happen to work their way into our mortgage rate sheets. So that is all very good. I liked they actually explained that today. But basically, what I took from the press conference, which I'm going to touch on very quickly, but I do want to read the Fed's statement, so I'm going to read that to you guys as well. But what I took from it was that we are going to get at least 2 more rate cuts this year, with the possibility of maybe 3 rate cuts, 3 more before the end of the year. I'm not feeling like the 3 is going to come. I'm feeling more like we've got 2 more to go to the end of this year, but that is all very positive news. It really sent the market running, which is good. Our interest rate gains that we've received over the last 3 weeks are holding steady. I haven't seen anything up until this minute starting the show that would indicate that rates are going the wrong direction. They are holding steady. We're gaining a little bit in basis points, which is great. 10-year Treasury holding steady. So that is good for anybody that was worried that today's announcement was going to make or break these nice rate gains that we've seen here over the last 3 weeks. It did not do that, which is fabulous. And I did say that in my show last week. I told you guys everybody's counting on a quarter point cut. They've already built that into the rate sheets. If we get that quarter point, I didn't necessarily seem to think that we were going to see any crazy changes, which is exactly what's happening. So that's fabulous. I would have liked to have seen a bigger rate cut. I think that would have been nice. But I'm very happy that they did cut the rate, because it could have gone very, very badly had they chosen to actually hold rate steadies and not improve them. So I do want to remind everybody before I jump into this, this is an open show. You guys are more than welcome to put your comments into the feed. Just go ahead and make a comment. I will read it out loud. I will answer it for you. If you're here watching, thank you so much for joining. If you've never been on the show before and you want to know when I go live and you do not want to count on YouTube to send you, a notification, make sure that you text the word live, LIVE, to 844-935-3634. That's 844 We Lend for You. WELEND LEND, and the number 4. So let's jump into this Federal Reserve announcement. I'm going to pull this over so it's going to look like I am reading, and that is because I am. There is no way that I could do this without having this up in front of me, but I'm going to read this for you guys. So it says, recent indicators suggest that growth of economic activity moderated in the first half of the year. Job gains have slowed and the unemployment rate has edged up but remains low. Inflation has moved up and remains somewhat elevated. The committee seeks to achieve maximum employment and inflation at the rate of 2% over the longer run. Uncertainty about the economic outlook remains elevated. The committee is attentive to the risks of both sides of its dual mandate and judges that downside risks to employment have risen. So that was one thing that we'll talk about from the press conference, is that the unemployment has risen, it's gone up, as well as jobs. So the job hiring and job firing is remaining the same. So we'll talk about that. In support of its goals and in light of the shift in the balance of risks, the committee decided to lower the target range for the federal funds rate by a 0.25 percentage point to 4 to 4.25%. In considering additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. The committee will continue reducing its holdings of Treasury securities and agency debt and agency mortgage-backed securities. The committee is strongly committed to supporting maximum employment and returning inflation to its 2% objective. So one of the things they talked about in that press conference was that before, their strongest objective was inflation. That was the thing that they wanted to get down the very most. It weighed the most on their books as far as concern. With the unemployment report, the jobs report, jobs being created numbers, they are now saying that jobs and inflation are 50-50 in concern. So to try to explain what that paragraph is talking about. In assessing the appropriate stance of monetary policy, the committee will continue to monitor the implications of incoming information for the economic outlook. The committee will be prepared to adjust the stance of monetary policy as appropriate if risks emerge that could impede the attainment of the committee's goals. The committee's assessments will take, now for some reason it got all blurry on me. So let's see if we can make this smaller. And it's blurry on me. Let's see if the other one is. Okay, here we go. In assessing the appropriate stance of monetary policy, the committee will continue to monitor the implications of incoming information for the economic outlook. The committee would be prepared to adjust the stance of monetary policy as appropriate if risks emerge that could impede the attainment of the committee's goals. The committee's assessments will take into account a wide range of information, including readings on labor market conditions, inflation, pressures, and inflation expectations, and financial and international developments. Voting for the monetary policy action were Jerome H. Powell, Chair John C. Williams, Vice Chair Michael S. Barr, Michelle W. Bowman, Susan M. Collins, Lisa D. Cook, Austin D. Goolsbee, Philip N. Jefferson, Albert G. Musalem, Jeffrey R. Schmid, and Christopher J. Waller. Voting against this action was Stephen I. Mirren, who preferred to lower the target range for the federal funds rate by 0.5 percentage point at this meeting. So I thought it was important to also read that to you guys, who was making the judgment calls, who was voting, and Mirren was a big pusher in 0.25% was not enough. We needed to do 0.5% today. I would have liked to have seen 0.5%. I feel like that is what we need. If we know that we're going to lower the rate at least 2 more times before the end of this year, why would we go quarter? I'm personally a believer of rip off the Band-Aid. When they kept doing, every meeting over the course of 2 years was 0.5 point increase, 0.25 point increase, 0.75 point increase, and it just kept going and going and going. It was like, why didn't you guys just rip off the Band-Aid? Just throw us up to the number that you wanted us at, slow us down completely, get us back under control, and then start to lower interest rates. Now, I get it. They needed to do it in slow increments. They very well could have completely tanked our economy. I know why they did it, but I'm one of those people where I'm like, just rip it off. Just get it over with. If you're going to hurt me, punch me in the arm, do it as hard as you can. Just do it once. That's just how I am. But I understand why they take things slow. And it's because they don't want to, do something that is so crazy, so fast that it completely throws the economy into a whirlwind. So I get it, but obviously we would have all liked to have just seen it faster. And I would have loved to have seen that half point today instead of that quarter point. But that quarter point did come. We got it, which was great. It was what we were expecting. It did not throw the market off. Mortgages are still sitting at the same place. We've got all the gains that we've gotten over the last 3 weeks. Those gains are remaining. They're holding steady. We didn't lose them today by the Fed deciding to not cut rates, which is what was expected and anticipated and already built into the rate sheets. So again, I want to remind you guys, this is an open conversation. Ask your questions. I can see that Why Not jumped in and he says, yay, Wednesday and a rate cut. So that is absolutely right. Knowing that we're going to get additional rate cuts coming this year, at least 2 is what they're saying. Now, again, they tell us stuff all the time, and sometimes it doesn't happen, but they are saying at least 2, and there is a possibility of 3. So I would love to see 3, as all of you, I'm sure, would love to see as well. But what does this mean for all of us, right? What does it mean for rate sheets? What does it mean for buying a home? What does it mean for, doing a real estate transaction right now? Should you be looking at refinancing? Should you be looking at purchasing? Should you be waiting for them to continue to do these rate cuts? Now, I've said this before, and I'm going to say it again. Number 1, when we know a rate cut is coming, well in advance of it coming, last 3 weeks as an example, we build in those rate cuts into our rate sheets in advance. Do I think between now and the end of the year, interest rates are going to continue to slowly improve? Yes, I do. Do I think we're going to see any massive, crazy, super, super quick change? No, we're not going to drop from, 6.5% to 5.5% within the next 3 months. I don't see that happening. But I do see over the next 3 months, interest rates continuing to improve. So should you wait? No, you shouldn't. One of the things that happened in that Federal Reserve meeting today was when that question was asked about mortgage rates, and it was also asked about the housing market. The chairman was very clear in the answer that he provided, and he said, unemployment right now is still at extremely low levels. The jobs issue right now is that they are not firing and they are not hiring. So people in their jobs are remaining stagnant. Okay, so that's okay. That's okay because people aren't losing jobs. So that is okay. People are working, they have jobs, they have income, they are paying their bills. Economy is staying good, right? We're staying strong. Okay. What happens in a good, strong economy? People continue to buy homes. The housing market issues, the reason that the prices are so high, straight from the Federal Reserve today, Mr. Jerome Powell says out of his mouth, we have a shortage of housing. We have a housing crisis. We have been saying this for years. You guys have heard me talk about it. Not in quite some time. I haven't really touched on it. But I have talked about it throughout the years that I've done the show. When we don't have enough housing, how it's very difficult to get housing to crash. Housing isn't going to crash if we don't have enough housing for the amount of residents that we have in the United States. The other thing is that, sellers have equity. People, even if they're struggling and behind on mortgage payments, they have equity. So they're not going to just go to foreclosure. They're going to sell before they lose their home. They're going to take their equity. They're going to go to their bank and they're going to work on a modification. One thing that was a positive that came out of the housing crisis from 2008, 2009, 2007, is that the banks learned how to work with people who were struggling and formulated policy within their organizations to be able to do loan modifications, to be able to help people that are struggling. So they're not necessarily going to lose those homes, even if you're seeing that maybe the notice of default rates have started to go up. Yes, they have. Are they at the numbers that we saw during our Great Recession? Not even close. Not even close. And those people that are struggling in those situations can reach out to their banks, and their banks can help them because they now have policies in place from what we all went through back 15 years ago. So you have to remember, and was it even 15 years? I don't even know. I'm sitting in studio, but you have to remember that people aren't losing homes right now. We have a housing crisis. We don't have enough houses per capita. Period. End of story. Mortgage rates are coming down. The Federal Reserve, Jerome Powell said, our chairman said, with interest rates, mortgage rates improving, which they have done and which they are going to continue to do, that housing is going to become a factor and more of a forefront at people's minds. It's going to be something that people are thinking about doing. When you have more people thinking about it, more people are acting. As more people are acting, there are more transactions that are happening. So we're not going to see housing prices take a total crash. What we're going to see is housing calm down. We've seen a lot of reduced prices. We've seen it take longer to get a home sold that has been sitting on the market, but we haven't necessarily seen a huge decrease in pricing. We're not going to see that. This is going to help the housing market, rates coming down. So should you wait to buy something? No, you shouldn't. What you should do is you should get in before things are, off the wall, before home values start to appreciate again, because what they've been doing is holding stagnant. You should get in before prices start to go up further. And what you should do is you should refinance as interest rates continue to come down. If you have a loan and you need to get some debt paid off, if you need to do home improvements, if you need to consolidate something, if interest rates are at least 0.75% better than the interest rate that you have today, then you should be refinancing, even if it is just to refinance your current loan. If you have debt that you're consolidating, you need to look at overall, what are you paying in interest rates? You need to take the money, you need to get the debt paid off, because interest rates will continue to come down and we will have opportunity to refinance that loan again in the very near future. Nicholas jumps on, says, hello, Debbie, can't wait to call you later and get this refinance on my house going. So Nicholas, it is so great to see you on. You are one of my biggest fans. And I love that we have been working with your numbers and trying to get things moving along for you. Nicholas is a great example of somebody who is going to be able to take advantage. He's got some debt. He's got a very low interest rate on his current mortgage right now. But when we put all of the numbers together, what he is paying overall every month out of pocket, by doing a new refinance, paying off the debt, getting one monthly payment, his monthly cash flow is significantly better, and it's setting him up getting the cash today to be able to do a lower interest rate refinance again in the future. And, there's many of you out there that are in that same situation that might be thinking that this would be a good time to do that. So Nicholas, thanks for jumping in and letting me share your story. But today was a great day, you guys, and it was a great meeting, and we got a lot of information out of it. I'm going to go to a super quick commercial because I need to take a drink of some water. I'm going to be right back. This is going to be less than 60 seconds, so stay tuned.
She's the mortgage mom.
This is Debbie Marcoux, the mortgage mom. Well, I've had a lot of questions lately. What can I do to bring my monthly payment down until interest rates get better? Well, if you are a buyer and you're out looking at homes, what you want to focus on is a program called a 2-1 buy down. If the market rate today is 7%, you would start your first year at 5%, year 2 at 6%, and year 3 through 30 would be at that 7%. It's a great way to enter the market today, knowing that rate cuts are just around the corner. Give us a call or head on over to our website at mortgagemomradio.com.
Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926.
When you're in need and don't know where to go, pick up the phone and call Mom.
Okay, so welcome back to Mortgage Mom Radio. I'm Debbie Marcoux. I am the Mortgage Mom, and I was not clicked on multi-stream chat. So I just clicked on it, and I can see that my mother-in-law, Karen, jumped on. She says, happy to hear the newer states added. Thank you. So you're very welcome. I'm super excited. We got Hawaii on board. I don't even know which other ones that we added, but we've got a lot of states there if you guys are listening, and I'd love to help you guys wherever it is that you might be living and wherever it is that you might be moving to. So I do want to point something out. I ran that commercial today on purpose because I actually filmed that commercial last year in 2024, and it was actually May of 2024 that I filmed that commercial. At the time, interest rates were between 7.5% to 7.75% for a conventional loan, and we were right around 7% for an FHA loan. So with a 2-year buy down, you can start your first couple of years at a reduced interest rate to help offset what that mortgage payment is while we wait for interest rates to improve to be able to refinance again to lock in that lower interest rate and payment for the rest of the loan term. Now, today, if you were calling me today, and again, every single person gets a different interest rate. I want you guys to hear that. Not one single person gets the exact same rate quote. But if you were calling me today for a conventional loan, we would be somewhere around 6.75%, possibly as low as 6.5%. And on an FHA, we would be around 5.625 to 6%, depending on your scenario. And you would be starting 2% below that. And now this is talking about a purchase. This is not for a refinance. That commercial is for a purchase if you are out looking to buy a home. But let's just say that the average rate between all of the different programs, FHA, VA, conventional, jumbo, you're 10% down, you're 5% down, you're 30% down, you're 40% down. Let's say that the average interest rate today is 6.25%. Let's just say. Then that means that year 1, you're at 4.25%. Year 2, you're at 5.25%. Years 3 through 30, it is still a 30-year fixed interest rate loan. It is not an adjustable rate that could move on you and go wherever it wants to go. For the rest of years 27 through 30, you would be at that 6.25%. So it is helping you year 1 at 4.25%, which is sub low of where today is. 5.25% year 2, which is more realistic to think that that's probably about where we're going to be in about 12 months from now. So as of year 2, you're at 5.25%. And in that second year, we have most likely, I can't say positively, but most likely, we have the possibility to do a refinance into a 30-year fixed at 5.25% instead of the 6.25% where you'd be today. So if you think about it, you never paid 6.25%, which was today's interest rate. You paid 4.25% and you paid 5.25%, and then boom, we try to get in there and we try to refinance it before it adjusts to that 6.25%. But hey, guess what? If interest rates go up and we're all wrong about everything, and the just market just goes nuts and changes all of a sudden for no reason, who knows why? You have an interest rate of 6.25%. You knew day 1 what that monthly payment was going to be on year 3 through 30, and you're prepared for it. Where an adjustable rate mortgage, you're not prepared for something that after your fixed term is just going to move and jump and bounce all over the place. So a 2-year buy down is fabulous. It is great, especially on conventional and on FHA or VA. It is a great product and something that you should be reaching out to me. But I thought it was interesting to run an old commercial so that you guys could see where interest rates were May of 25 versus today. I just quoted a rate yesterday. And again, every single person gets a different rate. I have to say that. If your credit score is 800, you are going to be quoted a different interest rate than somebody whose interest rate or credit score is 600. You're a different risk factor. The lower that your credit score is, the higher that the risk that you are. So give an example, FHA loan. If you're calling me and it's a purchase and you have a 780 credit score, or you have even a 720 credit score. Realistically today, you're going to be able to lock in a 30-year fixed rate mortgage at 0 points, not paying points. You're going to be able to lock that in again on a purchase. 720 or better credit score, I would say. This is FHA and VA. And you're going to be at a rate around 5.625 in that area. Now, if you have a 600 credit score, that same exact FHA or VA loan is more than likely going to be an interest rate of about 6% to 6.25%, depending on where your credit score is. Sure, I can do a loan, an FHA loan, for somebody that's had a bankruptcy just 2 years ago. If you've rebuilt credit, 1 year, if you had extenuating circumstances, and we can talk about that. I can do a credit score of 580. I can do a credit score of 560 with an FHA, purchase or refinance. However, the interest rate is going to reflect the risk. If you've had a bankruptcy, if you've had a previous foreclosure, if your credit score is in the toilet, you are going to get a higher interest rate than what you'd get if you've got great credit. So I have to make sure that everybody understands, as I'm talking about interest rates, I'm kind of giving you guys averages, not what my rate quote would be today. And you hear it and you go, oh, that's way high. I can totally get better somewhere else. Guys, if you love me, just call me and give me the opportunity. Let me try to at least talk to you about interest rate. I dare you, shop me, and let's see if you can find somebody that prices out better than I do, because I am very aggressive. But, you know, I do want you guys to understand that everybody gets a different rate. But here is the difference. May 2025, I was talking about an interest rate of 7%. That would have been for an FHA. And today, and that would have been a great credit score and a purchase, not taking cash out, not a low credit score. And today I'm talking about 5.625. That is how much we have improved since May of 2024, you guys. It has been huge, and nobody's really realizing it's been a slow escalator. Yes, it has been over a year. It's been about a year and a half at this point. It's been a slow escalator, but it has been getting better, and you've got opportunities today that you didn't have in May of last year, and that goes by really, really fast, and you may be thinking, I just can't do this. I can't afford it. It's not possible. I can't refinance. The rates are too high. I can't get things consolidated. You absolutely can. It's absolutely an opportunity. You possibly, most likely, qualify for more if you're looking at a pre-approval to purchase a home today than what you did back in May of last year. So get on the phone, start calling, start asking, talk to me. Let's see what we can do for you. Let me go back to multi-stream, and I don't see any new comments there. So that is actually from Facebook. So we are streaming on Facebook and YouTube. The majority of you guys are watching me on YouTube, and I absolutely love it. Want to remind everybody that you can opt in to get a text message when I go live so that you do not miss a show. Text the word LIVE, LIVE, to my office number, 844-935-3634. That is also how you call me if you want to talk with me. And you guys can go to my website, go to mortgagemomradio.com. You can also send me a message right through the website, and I will reply to you guys. So I don't see any questions coming in that you guys are looking to have answered. I would be more than happy to read them out loud and answer them for you. But should you be waiting? No. I'm going to tell you guys that. No, interest rates are going to continue to improve. If you've been thinking about buying a home, that is going to start sparking the market. You don't want to be late. Start looking right now before everybody else has caught on to the fact that things are getting more affordable, interest rates are getting better. If you have been thinking about refinancing, if you have been thinking about selling your home, if you need to make a move, call me. I have real estate agents all over the place that I can refer you to. If it is not somewhere that my team works, I have a real estate agent on my team that can help you throughout all of Southern California. I have many real estate agents throughout all of Southern California, Arizona, everywhere that I work. Nevada, we've got a fabulous couple of real estate agents that we work with there. I've got agents in Florida. I've got agents everywhere, you guys, and we will help you. We will make sure that you're getting credits from our agents towards your closing costs, which is very helpful as well. That helps you to get into a home with less money out of pocket. If you need to sell and you need a discounted, fee We're going to help you with that also. So whether you're buying, you're selling, you're refinancing, a reverse mortgage, Mortgage Mom Radio should be the first thing that you guys are thinking about. Doing this show every single week. I'm bringing you guys information. I'm explaining the market. I'm doing it for you. And I'm hoping that you love the information, you love the valuable education, and that from that you trust me and that you'd like to call me and talk to me. When you guys call, you are talking with me, you're talking with my team, and I watch every single file that goes through my office, even if I don't happen to be your direct contact. But 9 times out of 10, I am the person that you are actually talking to. So reach out, let's talk, go to my website, book an appointment, schedule a meeting. Let's see what we can do for you. I can see that Mike jumps on, says interest rates go down, prices go up. And Mike, you are absolutely right. And you are in it looks like Milltown, New Jersey. I am not licensed in New Jersey, but you are absolutely right. You are not wrong. And I've definitely, would be able to help you if you needed a referral to Milltown. I can get you over to somebody that could help you, but I would not be able to personally help you. But you are right. I love the comment. Again, you guys, this is open. Anybody can say anything that they want. You guys can ask me a question. Happy to read it out loud, answer it for you. That is what this show is all about. Going to run a super quick commercial that I did record today. And then I'm going to come back, and if there's any other questions or comments, I'm going to read them. And if there are not, then I will go ahead and shut down the show. But stay tuned. Hold tight.
I'm Vera Nelson, broker owner of Hyde Realty. Hyde Realty is a boutique agency located in Southern California, dedicated to our clients. We cover all of Los Angeles, Orange, Riverside, San Bernardino, San Diego, Ventura, and Kern counties. Whether you're looking to purchase your first home or sell your last, my team and I are here to help you. With years of experience representing active service members and veterans, we have the tools to get your offer accepted. We work hand in hand with first-time buyers to help them achieve their goal of ownership. We represent the savviest of buyers and sellers, from investors to probate and multi-million-dollar transactions. The Hyde team is ready to help and serve you with the knowledge and experience you deserve. Please reach out today if you would like to discuss your needs and how we can serve you. Once again, I'm Vera, broker owner of Hyde Realty, 626-298-3025. Vera at Hyde, Hythe, Realty, REALTY.com.
Okay, so welcome back. And I actually clicked on the wrong commercial, but just as I was talking about real estate agents, that is Vera Nelson. She is one of the agents that I do work with in Southern California. She is absolutely amazing. So it was actually kind of cool timing that I accidentally clicked on the wrong commercial, but super good. So Why Not asks, how often in a year are you able to refinance? So that is a great question. And a lot of people don't know this. So I'm going to spill the tea, as a lot of these influencers like to say. If you are buying a primary residence or refinancing a primary residence, there are rules from the CFPB that say that we cannot put a prepayment penalty on a mortgage that is your primary residence. It does not matter what type of loan that you take. It doesn't matter if it's private money. It doesn't matter what it is. It is not legal for us to give you a prepayment penalty. So what does that mean? That actually means that you can refinance the day after you actually close on a brand new loan. That is a possibility. Now, this is where I'm going to tell you guys how this works. If I do your loan, and I'm going to be 100% honest with you guys how it works. I do not make an hourly salary. I don't get paid by the hour. I don't make a salary of any kind. If I don't close a loan, I do not get paid. I am 100% commission. And that is how 99.9% of the loan officers in mortgage are paid. Okay. Some of them have an hourly wage, but it's a draw against commission. So they're getting this hourly wage to appease the IRS gods or whoever it is that says that we're supposed to be paid by the hour because so many people sued the banks over, wage loss or whatever. So they'll give them an hourly wage, but then they will literally take it back when they pay them their commission. So if they make $2,000 and they got paid $1,000 in a minimum wage hourly, they'll actually only get paid $1,000 from their commission. So that is how the majority of the mortgage industry works for loan officers. If you refinance a loan that I closed and you pay it off before you have made 6 mortgage payments, I will get hit for the entire amount. I will literally lose the commission, so they will pull it from me. So basically, if I have a commission check that is due to me for $5,000 because I closed 2 or 3 deals last month, and your loan paid me $1,500 and you refinance, they're going to take that $1,500 out of the $5,000 they owe me. So I'm only going to end up with a check for $3,500. Now I'm going to tell you that we do a lot of work as loan officers. You can't see what goes on behind the scenes, but I will tell you right now that the amount of hours that I work from the beginning of the day to the end of the day, and very, very many times, weekends, evenings, holidays, we are putting in well beyond the amount of time that you go to work and you do a 40-hour work week. Your actual loan application and your transaction is probably about 60 to 80 hours of work from start to finish, what we put in. So you figure if you take that and you divide that by an average mortgage that takes 30 days, you could see how many hours that we're working on that, right? So when you do that refinance, all that I would recommend to you is, number one, be mindful that the person that did the loan for you has absolutely zero control over mortgage rates dropping. So when we lock you in, if that was a great rate at the time, they did a great job for you. But now all of a sudden you close the loan and you can find that somewhere else has a better interest rate. Be mindful of what you're doing to that person's salary, to their family, to their income. Call that person back and say, hey, you did a great job for me, but I'm seeing that interest rates dropped again. Is there any way that we could refinance that loan that you just closed for me? Do you have a better interest rate you could get me into? Now, let me explain to you how I feel about that. I am so honored when people do that for me, and I'm so beyond grateful, because even though I might lose all of the money that I earned from doing the loan for them the first time, I have the opportunity to do the second loan and to get paid on that loan. So how I look at that is, you know what? Something is better than nothing. 50% of of my earnings, it's basically like giving you a 50% discount for your loan, right? But something is better than nothing. It helps me. It helps my family. It doesn't sting as bad. So just keep that in mind. Owner occupied property, you can refinance as often as you want, as many times as you want. No prepayment penalties. If somebody tells you that you can't do it for 6 months, now you guys have the real understanding of why. That is why they are telling you that. It's not true. You can. The rules say you can refinance whenever you want. Now, if it is an investment property, if it is a second home is just like a primary residence, no prepayment penalties, exactly the same. Investment property. When I do mortgages for people, I do not write prepayment penalties. However, which means, again, same exact thing as the primary, if I did the loan for you, you'd be able to refinance it as many times as you want. But I would lose my money if you pay off before you've made 6 mortgage payments. Now, there are many mortgage companies, and there are many loan programs that we might get you into, and they offer a discounted lower interest rate to you if you are willing to take a prepayment penalty on an investment property. If you have a prepayment penalty, you can refinance whenever you want to, but you are going to pay that prepayment penalty, as part of your mortgage loan payoff. So if you say, hey, I'm willing to take a 1-year prepayment penalty on my loan, that means that if you refinance before that 1 year is up, there is going to be a penalty to you because you did the refinance before that 1 year. So you have to make sure that if you're buying an investment property, make sure you're looking at fine print, make sure that you are asking the loan officer if the mortgage that they are setting up for you has a prepayment penalty. Those prepayment penalties come in 1 year, 2 year, and 3 year increments, at least on the loan programs that I work on as options. Again, I never quote or put somebody into a prepayment penalty ever when you come to my team. I just feel like it just really restricts what, your chances are down the road of being able to possibly lower interest rates could be. However, there are people that will ask me, can you give me a prepayment penalty to lower this interest rate? I'm qualifying today. I know that in a year from now, I'm not going to be able to. I'm switching jobs. I'm going from a W-2 to be self-employed. It's going to take me 2 years to get that, set up and moving and making money and tax returns to qualify for another loan. So they want the lowest rate that they can get, and they don't care about taking that 2-year prepayment penalty. That's their choice, and we talk about it, and I quote it, and then ultimately, as the client, they decide. But if you're hearing an interest rate that is much lower than what other people are quoting, make sure you are asking that question if you are looking at taking out a mortgage for an investment property. So why not? That was a great question, and I kind of went a little bit on a tangent in that, to answer your question. But the short of the matter is you can refinance whatever you want, and as long as you're in a primary or a second home, there are no prepayment penalties. But think about your loan officer if you can. Try to have a heart. Think about how hard that you work and how you get paid for the work that you do. And how would you feel if somebody just literally ripped it from you after you worked on a project for 30 days and then they said, oh, sorry, we're just going to go ahead and take that back from you. So just be mindful of that, guys. So I don't see any other questions. I'm going to jump over to my multi-stream. Again, I don't see any questions there at the moment. So with that, I am going to wrap up the day. I hope this was a great show for you. Remember, I am here every single Wednesday at 1 p.m. Pacific time. And next week, we'll be talking about what comes of today's rate cuts. Will we see even further lower interest rates? Do they get better again for a 4th week in a row? Do they jump back up markets cannot continue to go down, 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 down. We usually go down, 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 up, down, 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 a little bit more up, down, 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 up. So let's see if we get a little uptick. Let's see if we get some more downside. And if you've been thinking about doing something, reach out, guys. Go to the website, call my office. Send me an email, whatever you've got to do, 844-935-3634. That's 844 We Lend for You, WELEND, and the number 4. Happy to help. Happy to do the numbers, happy to decide, to determine, does it make sense? Should you still wait longer? Is now a great time to get it going? The math doesn't lie. I'm going to show you the math. I'm going to show you how that works out. And then you decide. You're in control. Nikki says, great info, Debbie. Thank you. And Nikki, you are very welcome. And Nikki is one of my Arizona agents, as I mentioned earlier in the show, that absolutely will help you out, get you guys some help towards closing costs. And she is amazing. That's all I have to say. Amazing. So again, if you guys are thinking about buying, selling, refinancing, or a reverse mortgage, or a home equity line of credit, whatever you guys need, think of Mortgage Mom Radio. 844-935-3634. I hope you guys have a fabulous rest of your week.
She's the mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call Mom.
Thank you for tuning into my show. I'm Debbie Marcoux, and I am the Mortgage Mom. I'm licensed by the Department of Financial Protection and Innovation under the California Business Consumer Services and Housing Agency, NMLS ID 237926. Also licensed in Arizona 0941504, Florida LO 76508, Georgia 69178, Hawaii 237-926. Idaho MLO 208-023-7926. Illinois 031.005-8339. Nevada 57237. North Carolina I-210940. Oregon, Tennessee 184-373. Texas, Washington MLO 237-926.